Well, global stock market's still on a tear. Now, did you know almost 20 world indexes traded at new multi-year highs this year already? Did you know that Japan, the hottest of the hot, up 3.8% just today? CNBC's Seema Modi joins us now with the details. Good evening, Seema.
Very good evening to you, Larry. You know, we've seen this revival in global equities. Better than expected earnings, easy money from the Fed, and decent economic data has brought fresh money into equities, helping the Dow break 14,000, the S&P 500 and the Nasdaq trade at new highs. But the rally doesn't stop there. European markets also posting sizable gains for the year. Confidence in Greece's financial markets and the ECB's ability to solve the debt crisis, that's fueled the ACE, the Swiss and the FTSE index. But in Asia, as you were mentioning, it's all about the Nikkei, the Japanese index hitting a 52-month high yesterday as the yen continues to weaken against the U.S. dollar, thus boosting exports. And get this, the yen could potentially go lower, Larry. An analyst at BK Asset Management says Prime Minister Abe is expected to appoint a new governor who is dovish, which could ultimately lead to a weaker yen. So, Larry, the global rally might not be over yet.
I think you're dead on right. Absolutely dead on right. Let's bring in our investors to talk about this. This Japanese story may be the key to why the American stock market is rising. We have Brian Kelly, the co-founder of Shelter Harbor Capital. We have Lee Munson, Chief Investment Officer of Portfolio LLC. He's the author of The Rigged Money. Dan Greenhouse, kind enough to stay with us. Brian Kelly, I just got to get this through. What the Japanese are doing, they are trying to end deflation. And in doing so, they are trying to normalize the yen, and that is pro-growth, it is pro-liquidity, and I think it's improving the entire world's stock market and economic outlook. So take that.
Wow, I mean, that's an awful lot to put on the Bank of Japan and Prime Minister Abe, but it's
and I never even met him. I don't know Abe. I don't know a thing about him.
Well, listen, it's also pro higher interest rates, which is the biggest threat to this whole global bond rally or this whole global stock market rally. Anyways, if their rates go up by 200 to 300 basis points, not a giant move in the world of bonds, it's game over for them. They can't afford to pay their bills. So that's the danger that you have here. And that's why when you have any type of pullback in the market, what you need to watch for is stocks and bonds going down together.
Dan Greenhouse, do you agree with this high interest rate scenario in Japan put forward by the great Brian Kelly? Do you agree with this?
Yeah, certainly if interest rates were much higher, it would be a big problem for the economy. The question is, are interest rates going to be much higher? And the answer thus far is no. Brian is correct. A 200 or 300 basis point rise in a normalized environment is not that big.
But have Japanese bond rates gone up?
Not meaningfully.
Right.
And so in the context of what's happening, they're kind of having the best of all worlds. They haven't actually done anything. The yen has collapsed, the market has rallied, and interest rates, generally speaking, are still quite low.
Lee Munson, you know, sometimes a little easy money isn't such a bad thing, and here in the United States, we got a little easy money, and we also have some easy profits still going up. I think people are underestimating our story as well, Lee.
Well, I do. And, you know, Larry, I want you to have 2013 to be the year that you learn to love the Fed. You know, I understand why you have perma bulls. You know, I just want to be one this year. The thing that I think that we have to remember is what can end this bull market. And I don't think it's going to. But we've got to have the Fed start tightening. They're not going to. And when they do, it's going to be in easy steps. Number two, we've got to have an inverted yield curve. And it's not. There's a few emerging markets out there, but not here in the United States. It's great. So we also have to have an over-exuberance for markets, and we don't. I'm still, Larry, out here in New Mexico, I still have to convince people to buy stock as part of sort of a balanced portfolio. So we have Japan. It was like this fourth wheel to the economy, didn't show up, you know, to work for 20 years. All of a sudden, it's back.
Right.
Markets are up 30%. And like as Dan said, they haven't even done anything. It's just a hope.
Since the middle of November. And Seema, it's very interesting.
This is phenomenal.
In my day, when I was a Wall Street economist and so forth, Japan was like, I guess like China is today. It was pivotal to the world economy. I don't know if that's fair. And what Japan did affected everybody's expectations. Now that they're doing this, and maybe they'll grow a little faster, I just wonder whether this won't even trigger not only more stock rises here, but more investors, retail investors coming in. They see markets rise. What do you think? Do we have any reports of retail coming in?
You know, that's a great question. I think back to your point about the yen, if it continues to weaken, we see the Nikkei move higher, what does that bring in terms of this global market rally? What is the effect on other emerging market indices, including India, China, and how does that impact Europe and then ultimately the U.S. indices? I think that's a great question and a trend to follow.
You know, BK, I actually will go so far as to say that this Japanese easing move, as illustrated by the decline of its currency, which I think is exactly what it should do, is actually helping Europe. They do a lot of trading with Europe, and I think Europe is too tight. Europe has not had a great stock market. Some of them have done well, but if you look at the aggregate in Europe, the Dow Jones European, it hasn't. I think they're too tight in the European Central Bank. And like Lee Munson says, you got to love. Sometimes you got to like to love or love to like your central banker.
Well, listen, Europe, I mean, this is another risk. Europe is not fixed at all. And I talked about stock markets and bond markets going down together. And that's exactly what's happening in Europe. I agree with you. They're too tight in Europe. I don't know if they're going to loosen up. The assumption is that the ECB will come in if Spain and or Italy needs help. I'm not sure that that could actually happen this year. I think Europe goes to the political brink once again, and we're used to that. It brings equity markets down, and then we'll have to see from there.
But Dan,
yeah, but the only thing
on
the table is whether it's 12 or 24 months in Europe. Yeah, but that's the only thing that we're dealing with Europe.
Well, they're going to protect them. We know that. I just want to make a couple points. Dan, gold prices, all right, now relative to these currencies, they're rising. But gold prices in dollar terms is not rising. No. And that tells me this global inflation breakout is not happening. And in fact, it's not happening in the USA. I'm not an easy money guy. You know that. But I don't see it in gold and commodities right now. I just don't see it.
I'll say two things. The first is the threat of a global inflationary outbreak was always a scare tactic. Whether we agree or disagree with what the Federal Reserve has done and is doing, this is the 1970s. This is not.
Right.
And I mean, well, listen, we'll see how this plays out. But the bigger problem now is not just that what the Fed is doing and the response to the gold price, but what the Fed does coming out of this and what that does to the gold price. Credit Suisse just put out a big note saying that the gold bull run is over, and I know a lot of people are going to disagree with that.
Down over $300.
Well, sure.
It could be over. If you went up way too far in the first place.
Well, I mean, what's way too far?
I don't know. It went up to $1,900. I don't know. I thought that was way too. Lee Munson, one other point. I know you've learned to love the Fed. What about earnings? Profits are the mother's milk of stocks, Lee Munson. Profits are already, again, outperforming, even in the latest reporting quarter. They're outperforming. How about that?
Well, I think it's wonderful. I think that we need to start watching for the revised earning reports from Wall Street. Everyone to make a big to-do about fourth quarter of last year in the past. Right. I think that we're going to see 8 to 10% earnings growth for the year on the S&P. And if we were just valuing, Larry, from the last cycle before the crash here, the stock market would be 20, 30% higher than it is if we just looked at profits. And so we have to remember we've got a lot more profits than we did during the last cycle. Valuations are low. Quite frankly, we don't even need overvaluation. That would, if we had a 15 PE,
we're okay. We're okay. I got to jump out. I'll say one caveat. The only caveat I'll say is we cannot afford to be carpet bombed by another gigantic tax hike. We survived the first tax hike because it wasn't near as bad as people worried, including myself. You run another tax hike, you go after investors and entrepreneurs, and maybe this time it'll trickle down to the middle class. That will not be good. That's the one part
with the budget debate.
The whole budget debate may be important. Seema Modi, thank you ever so much. Dan Greenhouse, Lee Munson, Brian Kelly.